So what's up, AJT Jungle? Welcome back to the next segment in the Trader's Mindset. I think we're up to chapter 11. And this is the third and final part of the mystery of perception. Obviously, perception is a really big issue with traders. From the first two lessons, I think I've more than proved to you just how important perception is. Just how important having the right perception is. And we're going to finish it up today with probably the most important segment of it. But just to review, we talked about this last week where most learning occurs through sight, but the combination of sight and hearing accounts for about 88% of all perception. But we use sight, we use hearing, and in a way we use touch because you really have to feel um, you really have to feel the trades as well. And we talked about that last week. But we use a pretty significant part. But sight is a big thing, and sight is a big part of perception. All right. And we also talked about this. This is one of Mark Douglas's quotes: "Is you create your own game in your mind based on your beliefs, intents, perception, and rules. You do. But if the game you create is based on bad information, you will not be successful. And a lot of what you get is bad information because it's just the same information regurgitated over and over again, and it's just bad information. There's a reason why I'm an outlier, why I don't get mixed up in a lot of stuff. It's I'm trying to get you to understand what the real game is and how your beliefs and everything does not work with what trading is about. Okay, what you perceive it to be is not what it actually is. So when you create this game in your mind, you've got to base it on what trading truly is, not what you believe it is, and not what you want it to be. And then your rules have to be based on reality, not the perception of what your reality is. Okay, so today we're going to wind this up. We're going to be talking about perception and risk. Okay, unfortunately, most traders perceive risk to be threatening and viewed in a negative light. That is what screws a lot of people up. Okay, a lot of you take risk every day and you don't even think about it because you've accepted it, and to you it's not really a risk. Every time you get behind the wheel of your car, there's a risk, but you don't think about it. Okay? Your perception of that risk is that it's not detrimental to your overall well-being. But when you're risking money, there's something that snaps in there and it becomes threatening to you and it becomes a negative thing. Risk is then viewed as an enemy to our success, which makes us fear risk. In reality, okay, listen, this is very important. In reality, risk is a very big part of our success. It's not an enemy to success, it's our ally to success. Because without risk, we wouldn't make anything. We wouldn't be doing this. Okay, so risk has to be viewed as our ally, not our enemy to our success. Anybody that has started a business knows that if you didn't risk, you would not make money. There's no 100% guarantee business in this world other than no business. If you have zero business, then you're guaranteed to get zero in return. Also, traders will view losing trades as an enemy to their success. When actually losing trades is not an enemy, it's an ally. You have to look at it and understand that losing trades are an ally. This creates the scenario where a trader will create an environment where fear or hesitation about putting on the next trade will come about, or not allowing your trades to work. Okay, cutting them off before the market tells you that, hey, we're done. That's very, very important. All right, so another quote. We're going to have a lot of quotes from Mark Douglas in this part because this has a lot to do with his teachings. And believe me, if I did not get introduced to this guy when I did, I hate he only passed away a couple months after I was introduced to him, but his teachings resonate and turn my trading around. Because I was one of those where risk, I was terrified of risk and didn't realize that that's what was keeping me from being successful. So he says each trade is simply an edge with a probable outcome and statistically independent of every other trade. If you believe otherwise, then I can see why you're afraid. But I can assure you that for your fears are completely unfounded. And that's why one of the reasons why I tell you all the time is that just because one trade did one thing, the next one is not guaranteed to do anything else. And remember, I don't know if you were in the class where I talked about the coin flip exercise. Okay, that was something that opened my eyes, and that opens a lot of people's eyes, especially when I can do it live. And you really understand how if you just have an edge with a probable outcome, the flips they're statistically independent of every trade, of each flip. Because you don't know whether, you know it's probable that it's going to land on heads or tails, but you don't know if it is. And our trades are the same way. When we get in, we don't know what it's going to do. But we know the edge is in our favor. And we could go through 3, 4, 5 losing trades in a row and then hit 10 or 15 winning trades in a row. We just don't know. But that can't be a source of fear. We have to accept that fact as part of this process. Okay. Let's see. Don't market conditions change this or skew it in one direction? Well, it shouldn't. That's the whole point. Market conditions should not affect you in terms of how you feel about risk. Because risk is just something that you do. Now, how your trading process and how it's related to your trading process. So let's say I get up one morning and I think, "Ooh, this looks like it can be an aggressive morning, so I can be aggressive that morning." Or this looks flat, so I can't be as aggressive. Yeah, the risk is going to be different, but I'm not thinking about it because it's inherent in whatever I do. It's baked in. So if you're focused on it, it's going to create fear. It's going to create your fear of losing money, which is in turn likely going to cause you to lose money. Because one trader's perception of risk can easily be perceived as irrational thinking by another trader. Okay, and that's what happens. When I'm sharing my view or my perception of what risk and trading is, or people read, what Mark Douglas says, what risk and trading is about, people are going to dismiss it because they may be believing this one guy or the next guy saying, "Look, you don't have to risk but X amount of dollars and you can make all of this. Look at this trade." And it's just a one-off trade where you catch a falling knife or you jump in a trade that's running up on news or something like that. And what happens? It never comes back, and you could say, "Hey, I had a 10-cent risk and I made $5 on this trade." See, you don't have to risk a whole lot to make money. Well, you keep trying to risk 10 cents and find another 5 or 10, $5 move. You'll go broke by the time you find it. Death by 1,000 cuts. Because it does not happen often. But when we come into trading, and that's what got me in it, because I believed that, hey, I can risk tiny amount and make all this money. Any professional trader can tell you you can't come in thinking that way. Yeah, you manage your risk. You set what's manageable and what's rational based on your account size, and your end game, and then you go to work. Okay, and that's why I say risk is relative. But to the trader who perceives it in the moment, it seems absolute and beyond question. Meaning you're stuck on this risk bubble and it's preventing you from being able to trade freely. Excuse me. So you have to understand that risk is relative. Your risk is going to be based on, your personal factors. But once you establish that, there's no more thought about risk. You can't perceive risk to be negative. You can't perceive risk to be an enemy. It's an ally, because without risk, you won't make a dime. It's what it boils down to. If you think about it, if you forget all of the garbage that you might have taken in and you think about it, if you worry about risk every day, you won't make a dime. You wonder why a lot of small businesses fail. They start worrying about losing money. They start with in the back of their mindset that most small businesses fail within 5 years. They start with all of that in the back of their mind, and they don't last 3 years. Well, Boeing made a mistake when they merged with McDonnell Douglas. Boeing was one of the best companies in the world. I mean, they were hyper focused on safety and making sure everything was done right. McDonnell Douglas came in and they were all about profit margin. And so anybody that raised a question about safety and how they are, you know, trading profits for safety, they got fired. But that's what happened to Boeing. McDonnell Douglas was the worst thing that ever happened to Boeing. The worst thing. But that's a story for another day. But are you guys understanding what I mean by this? And I shared this with you at the end of last week because this was introducing this week. You know, most traders have absolutely no concept of what it means to be a risk taker and the way a successful trader thinks about risk. The best traders not only take the risk, but they have also learned to accept and embrace that risk. Again, they understand that risk is an ally. It's not an enemy. It's not something they have to fight or look at as negative. They embrace it as a positive in their trading. Okay, and because of that, there's a huge psychological gap between assuming that you're a risk taker because you just took the trade or fully accepting the risk inherent in each trade. If you're a person that just takes the trade, but then you rarely let your trades mature, then you're assuming you're a risk taker, but you really aren't. You're scared. You know, you fear risk. And that's the perception that you can't have. But when you fully accept the risk and you make it and you accept it as your ally, it will have a profound implication on your bottom line performance. Okay? I mean, do I take losses? Yeah. But, you know, sometimes I get mad because I have unrealistic expectations. It's not that I'm upset about the risk. I'm upset because I had an expectation that I shouldn't have had and that I shouldn't have placed on that trade. And then I get upset. I know I'm going to lose money. I know it. But because of how freely I can trade, I know once things turn around, I can make it back. And then some. So I'm not worried about that. I'm not sweating risk, which it allows me to trade, you know, freely and not sit there and cry about stuff. So for most of us, our perception of risk in trading is based on our previous and most current trades. So think about it. If you have lost 2 or 3 trades in a row, automatically, what are you gonna think about risk? What are you gonna think about risk? You're gonna think it's bad, and then you're gonna tighten your risk up. You start tightening your risk up. You start thinking about not wanting to lose any money or any more money. And you're like, look, this isn't working, so I've got to tighten my... No, it doesn't work that way. Professional traders are not affected either negatively or positively by the outcomes of their trades. They just trade. Because they believe wholeheartedly in their edge. They understand and they know risk is their ally. And they just trade. You know, and every trader that I've worked with in mentor sessions and all of that, whose mindset is not affected by the outcomes of their trades, I haven't. Everybody's concerned about, that I'm not making any money. You're trading 20 shares, 25 shares. I'm not showing a profit. Okay. No shit, Dick Tracy. You're only trading 20 shares and you're not risking anything. Why do you expect to make anything? Okay, that's the mindset that gets generated by a lot of people who aren't teaching the right things. I mean, that's it. You know, and that's how our mindset is programmed. That's how it's programmed growing up. We're programmed to be to fear risk and to only be able to risk when you can manage it. That's kind of what I'm looking at here. But this is very controversial in a lot of ways. Okay, I've had traders that completely resisted what I was trying to teach them because they were so hooked on not risking that they know they could do this without risking. Tom, Dick, and Harry is doing it, but they're not. And it gets crazy, but you've got to realize if you're not risking, you're not making anything. It's the bottom line. You have to be willing to risk and not perceive it as being negative. All right. So, if there's such a thing as a secret to the nature of trading, this is it. At the very core of one's ability, number one, to trade without fear or overconfidence. If you read this book, you know where this is coming from. Perceive what the market is offering from its perspective, not yours. It's you being able to interpret the price action, which is the market's perspective. Because that's what you're going to have to do to make money. Stay completely focused in the now moment opportunity flow, not worrying about what happened in the last several trades or what you want to see happen in the future. You got to stay focused on what's happening right now because this is what's going to make you money or lose you money. Spontaneously enter the zone. It's what Mark Douglas calls the zone. Trading in the zone. It is a strong, virtual, unshakable belief in an uncertain outcome with an edge in your favor. Okay, yes, the outcome is uncertain, but we have an edge, and we should have 100% confidence in that edge. And if we do, the belief in risk takes care of itself. The belief that risk is our ally takes care of itself. Because then we know without risk we can't make money. The best traders have evolved to the point where they can believe without a shred of doubt or internal conflict that anything can happen. All right. So professional traders don't just believe that anything can happen. Their belief in this uncertainty is so powerful that it prevents their minds from worrying about the results of each individual trade, i.e., they're not thinking about risk. They're not worrying about that. They're just worrying about executing their edge in the market because they know over a period of time they're gonna come out on top. It's just like when we talked about the casinos. The casinos know they have an edge. So it doesn't matter if you win a hand or two of blackjack or you win $500-$600. You know, when I win $500-$600, I quit. And the dealer looks at me like I'm crazy, but I'm done. Okay, I know the odds. And I know the edge is with me stopping when I hit a winning streak. I know that. And so I grab what I have and I come back in a couple hours when there's a new dealer. I mean, that's just the way I do it. But I'm not worried about, you know, the results of each hand. I'm just focusing on executing my I can't say that I have the edge, but the little bit that I can control, I got to keep focused on that. And this is what I have a problem with. Keeping my mind free of unrealistic expectations. And I wouldn't say that it's unrealistic. I'm saying that I have an expectation of a stock to go up or down. And sometimes my mind gets stuck on that. And then I get upset. But professional traders, when you reach that professional mindset, then you're able to keep your mind free of these expectations. And you worry about how each trade will turn out. You will look at your trading as a body of work over a period of time versus, you know, each individual trade. So in turn, these traders have learned and developed the mindset that they're looking to take whatever the market gives them, whatever the price action is giving them. But our minds are not wired to perceive every opportunity that comes up. We have to be able to interpret the market. For example, we can't perceive the potential for the market to continue to move in a direction that is already against our position if, for example, when we have the mindset of fear and being wrong. You know, a lot of times, if that happens, then we don't take trades off. You know, I've been accused of that because my risk window is wider. You know, I'm looking at a larger picture because I'm looking for a larger move. And, you know, some people said you got to accept that you're wrong and take it off. Well, I'm not wrong yet because the trade has not breached my line in the sand. But y'all saw the trades I took this morning. You know, when it reached my line in the sand, I had to take it off. I couldn't just hold it and hope it came back. I had to take it off. And that's just following my plan. Okay, but the fear of having to admit we're wrong causes us to put a large amount of significance on the information that will tell us that we're right. It's not about being right or wrong. It's about giving the trade a chance. Excuse me. Giving the trade a chance to work. If it hasn't technically, and the price action hasn't, you know, confirmed that the trade plan is dead, you've got to let it work. And if it doesn't work, it doesn't mean you were wrong. If you took the trade and the trade didn't set up and you just jumped in or you anticipated, then you're wrong. Okay, whether the trade works or not, you're still wrong. All right, if we take the trade when we're supposed to, we've read everything right, and the trade just doesn't work, we're not wrong. We can't look at it and say, oh, I made a mistake. I was wrong in doing that. No, if it clearly set up and it clearly gave you the signal, then you're right. Even if the trade didn't make money, you're right. But there's no right. You should not be focused on right or wrong. It's just doing what you're supposed to do. And then that's it. All right, a market trending in a direction tells us about the market behavior that we can plainly see and perceive, but we can easily block it out if we're fearful of being wrong and losing money. That means if a trade is moving against you and you have one level that you had set that I'm going to get out if it breaches, and then it breached that level, and then you look up and see another level and say, oh, I'm going to give it to this level, and then I'm going to give it to this level. If it does this, then I'm getting out. You don't want to be wrong. You don't want to lose money. So you keep raising your stop on a trade that technically is telling you it's not going to work. And then, but when that happens and we take it off and we beat ourselves up, when we zoom out, we look at it and realize we were wrong. We didn't follow the right direction. It's not that we were wrong taking the trade. We were wrong not sticking to our trade plan. We were wrong not listening to the market. Okay, but the saving grace is what you haven't learned will be invisible to you. You must accept this truth going forward. You must have an open mind. If you don't, the opportunity in the market will remain unknown and unseen by you. All right, so it's time to learn the rest of the story. Okay, it's time for you to learn the rest of the story. You can't get anywhere until you've learned the rest of the story. Alright, so new and struggling traders ignore the fact that they may have to adapt in order to become consistently successful traders. I've had, people argue with me. I've spent thousands of dollars on my education, and you're telling me that it's not right? Yeah. It's not right if you want to make money. If you want to take the next step, no, it's not right. Okay, you have to change your perception of risk. That's the biggest problem. Again, that is the biggest issue that I run into with my mentees, is being able to accept risk and understanding that you're not going to make a profit trading 20-25 shares and not risking. It's not going to happen. But there are two reasons for this. The first is that you need absolutely no skill of any kind to put on a winning trade. So that hurts your ability to understand the uncertainty and risk. It's, you put it on, you have no idea what you're doing, you just clicked it and you made money on it. And it's the best feeling in the world. It's like, man, I don't need to learn nothing. I just have to buy stock, and when it goes up, sell it. But it doesn't work that way. For most traders, it takes years of pain and suffering before they figure out or finally admit that there's more to being consistent than just the ability to pick an occasional winner out of the hat. There is a process and things that you have to accept in order to get to where you want to get to. All right? The second reason is that you don't have to travel anywhere to trade. All you need is access to a phone. You don't even have to roll out of bed, to be honest with you. You know, when my wife is sick sometimes, you know, she has her medical challenges that, you know, we have to work through. There are times when she's running a Zoom meeting in the bed. She's still laying in the bed. Okay, we could do our trades the same way. I could stay in the bed and trade every day. I wouldn't have to get up out the doggone bed. All right. Even traders who normally trade from an office don't have to be in the office to put on or take off their trades. It happens to me all the time. You know, because we can access and interact with the market from personal environments that we're intimately familiar with, it seems as if trading won't require any special adaptations in the way we think. But it does. It does. Again, let me reiterate this with this quote. Most traders have absolutely no concept of what it means to be a risk taker in the way a successful trader thinks about risk. Okay, I'm repeating this stuff because I want it to burn into your head. The best traders not only take the risk, but they've also learned to accept and embrace that risk. They look at risk as an ally versus an enemy. There is a huge psychological gap between assuming you're a risk taker just because you take trades and then fully accepting the risk inherent in each trade. Okay, when you fully accept the risk, it will have profound implications on your bottom line performance. Because then your mindset will not be, I only want to risk a tiny amount to make a huge profit. I'm only risking a tiny amount to make a huge profit. And that is the wrong mindset. Okay, that is a loser's mindset. And like I said, I get a lot of backlash from that. But until people really understand it, they're going to be stuck in a rut. All right, so the bottom line is you will have to develop the right mindset in order to be successful. Okay, everything I've covered in this program up to this point, and that I will continue, but everything I've covered up to this point will help you do that if you first accept the fact that you're not who you need to be right now to be a successful trader. You got to accept that. Okay, it was easy for me to accept because when I started teaching, I had to go through the hard process of accepting I was not the person I needed to be in order to be a successful teacher. So I had to work on that. I had to change my mindset about how I perceive teaching to be and immerse myself in the reality of what a teacher is and what our responsibilities were. Okay, so when I got into trading and I realized this is kind of the same scenario, I was able to accept the fact that I wasn't who I needed to be a successful trader a little bit easier than most people. But this is one of the hardest facts that I have to go through. And also be willing to put in the work necessary to change. If you're not willing to put in that work to change, you might as well quit right now. Might as well quit right now. And I'm telling you, somebody mentioned funded accounts in here. I'm telling you, if you're going to pass a funded account challenge, you got to have the mindset. And somebody asked me about them, and I looked at some of them. Man, hell no. Because you're limited to what you can trade. Some are just Forex. Some are just futures and, certain instruments that you can only trade. And looking at them, there's just not the reward there that I would like to see. But I know some of them, I believe, are good and do give you the ability to trade some good stuff. But most of the ones that people had me look at, I just didn't like the fact that you could not trade equities. And that's what I'm good at. But the process and everything is the same. You got to have the same mindset and all of that to be successful is what I'm getting at. Doesn't matter what you do. You got to have the right mindset. All right. Any questions? Or any more questions? If you do, what I'm going to take them. You can always ask me now. Send me an email, whatever. Excuse me. But I hope we just wrapped up the mystery of perception. All the things that perception can screw you up in. So I hope this starts to get you to change your focus if you've been resistant to it up to this point.